Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to work and trade Forex at the same time without losing your job and without trading crappy, having poor results. That's a tough situation to be in. I know when I was working, I was trading, and I'm retired now. And even being retired, there's problems in being retired trading. You, first of all, have to be realistic about the amount of time that you're going to need to dedicate to your Forex trading. And you can't trade 15 minutes, go do part of your work, come back, trade 15 minutes, come back later. It doesn't work that way. Like any skill, well, let's say with anything that takes skill to do, means that you have to apply that skill consistently over some period of time. You can't be a neurosurgeon and operate on one guy for 15 minutes and then go and operate on somebody else for 15 minutes and then come back. You have to be focused on the task at hand. You can't drive a car and solve calculus problems or even pull over to the side of the road and work on a calculus problem and get back and drive the car to the next stop sign or placed on the side of the road to pull off. Life doesn't work that way, or we don't work that way. I think what we're going to see happening with the rise of AI is a lot of people who are unfamiliar with the science of what AI is, what just general search for information is all about, and how those things all go together, because there's so many people out there that basically understand AI. They're going to be building apps and robots and stuff. And you're going to be convinced that you can just plug some shit into a robot or an AI trader and you're going to be all set. And you're not. When robots and automated trading came out, everybody went to that. And some of them have been successful at doing it. But for the most part, the robots eventually break down. Unless you're like Simmons and you've got these automated systems that are based by 3 roomfuls of PhDs in mathematics and physics and and stuff like that, economics, to be able to work on the algorithms and the diversity of those algorithms and have the smarts to put all of this stuff together. Yeah, I'm pretty smart. I got a degree in physics, almost a minor in math, software engineer for 33 years. And I've written a lot of simulations in analyzing not only Forex pricing, but also commodity prices when I was studying commodities. And notice I said simulations, not trading robots, because I realized with my background that as a single individual, regardless of how bright I am, and there's certainly people that are a hell of a lot smarter than I am that fail at that, I was under no delusion that trying to write an automated system was going to be viable in the Forex market, any more so than there would be an automated system to make the decision to buy real estate. Now, I was a real estate investor for 40 years and I wouldn't listen to an automated system at all. However, you can write systems that bring information together and organize it in a manner that you can then look at it and analyze it, and then based on your experience, make decisions as to whether you want to buy that real estate or not. And the same is going to be true in trading currencies. But when you're buying a piece of real estate or you're going to trade currencies, you have to sit down and you have to make the decisions. I mean, you just don't look at it, the broker brings you out to a piece of property and you go, oh yeah, this looks pretty good, let's go sign P&S. I mean, I've done that before, but I had the experience to do it. I always used to joke that I could buy a piece of property faster than you can figure out how to buy a pair of shoes, as long as it wasn't my own house. The house that we're in right now, that I'm filming this in, beautiful 1775 antique cape on 2.7 acres in the Lakes region in New Hampshire. My wife and I looked for 2 years to look for just the right thing. We weren't looking for a 1775 antique cape. We knew what we wanted, and we studied every day as to what different houses in different locations with different amenities, what their prices were that they were asking, what their sale prices were, why the reductions were there. Was it an economic thing, or was it because they had a swimming pool? Because a swimming pool is a detraction to a piece of property, except for a very small number of people who are willing to deal with a swimming pool. Trading is the same thing. You can't just trade for 15 minutes and then expect to be successful. Well, I suppose you could if you were reasonable in what you were doing and you were experienced. Yeah, I'm doing some scalping now, and I was in there and I put a position on. I got, let's see, I got 2 pips, closed it out. Price retracted back 4 pips and then went back up and started back up again. I'm in a long position here, and I went back in. I got 4 pips, and then I closed out. There was a retraction in price. It's going back up. So I'm 6 pips up, and it was about 15 minutes. And I'd only been looking. I mean, I opened up the trading platform and looked at it briefly. There wasn't anything to do right then, so I had some things that I was doing, trying to get a plan for this video. And then I looked at the screen, and things were there not for a long-term position, but for some just grabbing some pieces of the move as it was moving toward the long-term position. And I have a trade. I put the final third trade on and grabbed another 8 pips from that. Which was the goal of where I was going to go to. Originally, it was I think the total goal was 8 pips, and I'm sorry, the total goal from original take point to profit target was 20 pips, right? So I got 16 of those 20. And okay, well, Peter, if you had just stayed in the trade, you'd have got 20 pips. You got 4 pips more. Yeah, but if I'd have just stayed in the trade, it might have retraced to a point where I got skittish about it, and I would have got out, and I would have lost 5 or 8 pips for the day. So it's all in how the price action is working as to whether you can trade for 15 minutes and make 3 pips or 5 pips. Because sometimes you'll go in and you'll do that. If you have a short-term time horizon, then you have a shorter risk that you need to take. And if you happen to be in a choppy market where you're just trying to clip some of the rises and you get that wrong twice, well, you've lost more money than if you'd have just left it in there and gone, you maybe had a 10 pip stop. So very tricky in scalping, and I don't recommend doing that just because you don't have time to sit at the trading platform. If you're going to trade, my fast track program is designed and built around someone who can carve out an hour to 2 hours in the morning before they go to work, or maybe in the afternoon before you go to work if you're late shift. 1 to 2 hours. 2 hours being the optimum. Because in the beginning, well, if you're doing stock market stuff, you listen to the guys that are doing stock trading. The day before, they're doing all the analysis over all the stocks and trying to get where they're going and making their best guesstimates of what price is going to do tomorrow. You can't necessarily do that in the currency market, and it's not necessary for you to do any of that. That's the beauty of the currency market, is you can sit down at the chart as a day trader and look at a 4-hour chart and say, okay, here's some conclusions I draw from that. You drop to a 1 hour. Okay, here's some conclusions I can draw from that. Drop to the 15-minute. Look at that. How does that compare with what you saw on the 4 and the 1? Now you can set some anticipated entry points and exit points. And you can evaluate what price action is doing based on your boundary conditions, what you would probably call support and resistance. I don't call them support and resistance because people get confused about that. It's a boundary condition. Doesn't matter whether it's a support or a resistance. It's a boundary. And now you can talk about the characteristics of a boundary condition. Whereas if you said I have a resistance line or a resistance zone, that doesn't connotate anything more than this is the line that price shouldn't go above. even if you're talking about a zone, unless you draw the zone on there, you can't really be assured as to the strength of that zone, right? However, if you look at it in terms of conditions, which a boundary condition isn't just a condition, it's like a rule which is comprised of a bunch of conditions. A boundary condition is comprised of a bunch of conditions that make it a boundary condition, and that the information that you need as to its strength and its viability and its longevity are bound up within the conditions that you use for evaluating boundaries. That's why it's called I call it a boundary condition. And when you get skilled at that, you're able to look at your price action as it was over the last 4-hour chart time frame, which is many days, right? And you can compare that with the 5-minute time frame, or maybe the 15-minute, because that's where you're getting your entry and exit ideas from your entry analysis phase of what I call the life cycle of a currency position, entry analysis, position management, and exit methodology off that 15-minute. And then when you actually start making your trading decisions, you're down on the 5-minute, 1 minute, 5 second as a day trader. Why would I be down on the 5 second? There's so much noise. No, there isn't. It's called fractal. It's a critical study point in physics and mathematics. It's like looking at a leaf. You see this picture of the leaf, but if you cut one piece of that leaf off and looked at it and blew it up, it would look exactly like this part of the leaf. That's a fractal. In other words, whatever the shoreline looks like from 2 miles up, it's that shoreline. If you zero down and look at it from 10 feet, is going to be the same as if you look at it from 5 inches above the shoreline. It's still going to have those little bays and inlets and stuff. So because price action is fractal, the people who say that the 5 second, 1 minute charts have too much noise and you can't trade on them are not knowledgeable about the fractal nature of price action. And that price action is not just currencies, but it's stocks, it's commodities, it's cars, real estate, old tires, art, precious art. It's all the same. It's all the same. And so when you are looking at being a day trader, it doesn't mean you're trading all day. You don't want to trade all day, because if you trade all day, you're looking for opportunities to trade. And when you look for an opportunity, you will find it, but you'll lose because it's not really an opportunity. You created what I call an anticipatory trade by doing that. You can't do that, right? So you have to let the trade come to you. Again, I give the example of Jake in the movie Avatar. You know, how do I know when I found I forget what they call the animal, the bird, and they say, well, it'll try to kill you. So he's not looking for the animal. He's waiting for one that's going to kill him. And that's really what we're doing in our currency trading. We're looking for that trade that's going to be profitable for us. It's telling us it's going to be profitable. And it's telling us that through the conditions of the rule that you're using at that particular phase in the life cycle of a currency position. If you don't have this stuff, if you're not aware of what I'm talking about, I mean, I've got 560 videos at this point out there, and I talk consistently about the life cycle of a currency position. Send me an email and I'd be happy to chat a little bit with you and point out videos that in my catalog that might be helpful for you in order to get familiar with how the market is, not how somebody is telling you that you should be doing it by looking at a Bollinger Band. Is a Bollinger Band useful and helpful? Maybe, but it is ancillary and confluence for something that you need to do without the Bollinger Band. It just confirms. But if you have good rules, you don't need confirmation to those rules. You need conditions that create an event. It's called an event response model in software engineering. That's how you design these highly encapsulated, loosely coupled objects that receive input and have rules and conditions to operate and manipulate on that information that they're received, and then spit out a result. And so a trading rule is the same thing. It takes information in, and it has conditions in there that you go through. If all of the conditions are met, the rule spits out a Boolean yes. If the conditions aren't all met, the rule spits out a Boolean no. And it makes it really easy. You don't have to do anything. It's not like the airline pilot that has to check down through this complicated list of things to do. Those are things to do. A rule is a process. And so if you're going to, particularly if you're working and trying to trade at the same time, you can't do that on systems, static systems. You have to have process so that you can look at price action at that time when you sit down at your computer desk. God forbid you're not trading on your phone. I got students that tell me they're trading on their phone, and I say, look, if you're trading on a fucking phone, then I can't help you. You just can't do that. You might have made a trade. Once you understand the process of day trading, you can map that up into long-term position trading if you want, if that's really what you want to do. And there's some people that are gifted at that long-term position trading, not so much at the day trading. We teach you the trading rules as a day trader, but then if you want to do position trading and do carry trades, that's fine. I've done that. That's perfectly all right. But you have to know how to trade first and how to base your stuff on conditions so that in that 1 hour period of time that you have before you head off to work, you have to have the ability to look at that and evaluate that situation based on these rules and make decisions in that time frame. It really doesn't take you an hour to make those decisions. I said many times in my videos, people challenge me on this all the time, but I've got the trading platform up, and if there's nothing going on right then that I need to look at, I can come in and get another cup of coffee, which is what I'm doing right now. I'm out of my position. I've made, I don't know, 16 pips or something. I'm going to go back in. I'm going to look at it again because I don't think the run's done for the day. And so you have to have that ability to, as I'm able to do, is I'll go back in there and I'll look at the price action, and in 15 seconds, I've gone through the conditions in my entry analysis phase of the life cycle of a currency position. Nope. There's no entry, or there is an entry. If there is an entry, I hit bid ask, and then I sit down and I work that trade. I go into position management because once you have a position, you have to manage it, and then at some point you have to exit it. So then when it's time to exit, I go into the exit methodology phase of the life cycle of a currency position. All three of those phases can be done in 5 minutes. It's just what's price action doing right now. And in my video, my last video, where I talked about the 3 keys to successful Forex trading, the last key, one of those keys, was being reasonable in the profit projections that you were having. So you might have a yearly profit projection, which breaks down on a per trade basis as a metric. And you can say, oh, it looks like I can get 20 pips here. But your metrics tell you that on average, you get about 8 pips. Well, are you going to set your life and go away when you've got a 20 pip target and you're thinking you're going to get 20 pips when you'd be safer just getting out at 8? Do you think you're going to walk away from that? I don't think that's smart at all. So you need to, if you're going to take a trade, you need to sit down there and watch it. That's my view of it. If you're going to be a day trader, you'll be wandering around in the backyard with a trade running saying you're going to check it when you get back. Because you're abrogating your skills to time. If you want to be a good trader, you have to trade. If you want to be a good swimmer, you've got to swim. You want to learn how to drive a car, you got to drive that car. My wife and I just went out and bought it's a used truck. I wanted to buy a truck, so I bought a truck. Well, I haven't driven a truck. I've driven trucks, whatever, but I haven't driven a truck on a regular basis. So when we go to pick that truck up on Saturday, I'm going to drive it home. I'm going to drive it down. I'm going to find a lot somewhere, and I'm going to slam on the brakes, and I'm going to spin it around, and I'm going to back it up at 20 miles an hour, and I'm going to do all these things with this truck in order to get comfortable driving that truck, particularly backing it up, because it's a truck. I haven't driven a truck, and I don't want to be mowing down chopping carts in the store. So I need time to work on practicing and developing my skills. Doesn't do any good to drive the truck home, park it, and then in 2 days, take it out and drive it again, and then a day later, take it out and drive it again. If I'm going to sit down at the trading platform to trade, I want to put the trade on, and I want to be out, and I want to have that whole process done in a maximum of 2 hours. I'm retired, so I've got all day, but I don't want to trade all day. So that's what makes the fast track program so good, is because it's not that I don't have all day to trade. I don't want to trade all day. So it doesn't make any difference whether you're working or you're retired or you're fired and you got time to do it. Your job, having lost your job, is to spend 5 or 6 hours a day looking for another job, not watching reruns of one of your favorite TV series. Your job is to find another job. You don't have 6 hours to sit there and trade, hoping that everything's going to go together for you and you're going to make a day's wage on your $10,000 account. That's not going to happen. You have to keep up the consistency of your trading and make 50 bucks if you can. When you are doing that, you have to be concentrated in that 2-hour period of time. If you're really pressed for work, I have some people say, geez, I work 10 hours a day. I'm working in the ER, or I'm a land surveyor, and I'm out of town, and, I got to come back, or, I'm in sales and I got to run this long sales cycle. I don't have time for that. So that is something that you have to take into consideration. In any event, in talking about the time that you're going to be spending, you have to have that hour or 2-hour period of time so that you can focus on what you're doing and apply the rules. As you gain an experience, then you can do this 15-second thing and blah, 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 sit down and put it and be done in 10 minutes maybe, because you have your metrics to guide that trading process. So how to work and trade Forex at the same time is relatively simple, as long as you can carve out some consistent period of time in order to apply to looking at the chart. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.